Hello everyone and welcome back. My name is Greg Furman, a market analyst here at TraderPlanet.com, and these are the market positions for November the 9th, 2011. Now, to get started for tonight, we're going to begin with the Forex market, specifically the Australia-New Zealand cross pair. Now, what we're looking at here is short positions. We can see I have this line drawn right across the top where we have multiple attempts to break through this 131.50 area. So it looks like we have some good resistance forming here. Now, what we want to also notice, the predicted short, medium, and long-term differences are all pointing straight down. Our predicted short and medium-term difference have broke below this zero line. That's definitely something we look for. Now, the long-term the long-term predicted difference has not broken through the zero line yet, but I believe that'll come. Now, looking at our predicted MACD and our predicted TSI, both in heavily overbought territory and crossing the trigger to the downside. We can see here we are hitting some support from vantage point at 129.65, which is of course the 18-day predicted moving average. Now, looking at our individual crossovers, very important here. We can see, bringing this into play, that our short-term crossover is crossed to the downside. So for the next day or two at least, it's telling us we're going lower. Our medium-term crossover has just crossed the trigger, the vantage point trigger, which is the simple moving average. So again, this looks very good for a bigger move to the downside. Now, our long-term crossover has not taken place. We can see that we're getting close. The area between the predicted moving average and the standard moving average is narrowing. That is something we're looking for. So everything still looks good. So from here, based on this assessment, we are going to sell this. So now what we're going to do is we're going to go into the Vantage Point software and have a look at the predicted high and predicted low. We can see we have 130.61, 129.42. On a move towards this level, 130.61, we're going to use that to set short positions. Our immediate target will be 129.42. Now, excuse me, that's for a medium-term, a short-term trade, intraday trade. Medium, longer-term traders, potential here is clearly to the downside. Now, where we would want stops in a particular case like this, I would put them around just under the 132 level. That's where I would have this. I would open this up. I would use at least minimum 100 pip stop loss on this because we know we have that resistance sitting up in that 131.50 area. Now, if we look at the charts and we bring up the Vantage Point predicted high and predicted low, you can see it's doing a very good job calling the daily range. But I also want to take notice again here that we are not, for the last several days, we have not hit the Vantage Point predicted high, but we've tagged the predicted low or even lower each one of those days. So this again is a bearish setup for me. So any move higher, we're going to use to set shorts. Now that's our first position for tonight. Now our second position for tonight is going to be in the UNG, the United States Natural Gas Fund. I believe that crude oil is getting ready for a move lower. The correlation here is that crude oil moves higher, the natural gas usually moves lower. So that is a standard correlation that I've seen. Looking at this, we can see that we have a significant amount of support sitting down at this just above this $8 mark. So when we look at these, we look at the independent crossovers, we can see that our short-term crossover starting to turn up, but it hasn't made that cross yet. Neither is the medium term or the long term. However, the leading indicator in this particular case is the Vantage Point predicted MACD and the predicted TSI. You can see that we're basically running flat along this trigger. The predicted short, medium, and long-term differences are getting ready to move higher. I don't think that we're going to see any significant sell-off in natural gas coming into the heating season. I also believe we're going to move higher. From here, what we want to do is we want to have a look at the Vantage Point daily report because this is going to be our primary tool for tomorrow's trading. We can see that the Neural Index has been down 2 days in a row. We've now turned up. $8.44 is the price we're looking to get in at this particular ETF. Our immediate target is going to be $8.68. Now on an intraday basis, 20 or 30 cents may not seem like a lot, but it actually is when the share price is so low, $8.44. Now, looking at the charts, this is an intraday trade what we're going to be looking at, but again, for more of a medium-term perspective, you can see that not long ago the natural gas contracts were up in the $10 range. I believe they will return to that sooner rather than later. Now, if that's the case, then we're talking about a $2 move on an $8 share price on this particular ETF. In my respectful opinion, that is an excellent return. If I can get a 20% or even a 10% return on this particular trade over the coming days, weeks, or even months ahead, this is a very good looking trade. So again, for intraday traders, we're using that daily report in conjunction with the Vantage Point predicted MACD and the predicted TSI, why we're experiencing this little bump up in the crude oil prices. Personally, I believe that will be very, very short-lived. Whatever is going on in Europe, that's going to turn the other way. Something else will resurface. Equities will move lower. Crude oil will follow equities lower. And again, that should stabilize natural gas and push it higher as we move towards that heating season. So with that said, these are the market positions for November the 9th, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.